So hello guys and welcome back to the Traders YouTube channels. As you already know, my name is Or. I'm a stock trader and investor in the US stock market. So today I'm going to show you a little bit about what is short selling, and most important, how you can benefit from downside moves. So let's start from the theory, from the beginning. What is short selling? Short selling is to take a stock and then to sell it before you already get it, but to borrow from your broker a couple of amounts of stocks, let's say 100 quantity of Apple for this example, and then you sell it. Okay, you sell the stock, and if the stock is going down, you can buy it in a lower price. So what does it mean? What it's actually doing? So I bought it, let's say I sold it let's say 230 at this point. Okay, I sold it, and then I bought it here. I bought it at 150. So I bought it, you can see it like this. I bought it in 150 and sold it in 230. So I get like 50% profit from this trade. Okay, so this is what short selling means. Short selling, I will repeat this. Short selling means to sell something at the high, and then you have to buy it in the low. Of course, if it's not going through your direction, then you probably will be losing money, but you have to, you borrow some stocks from your broker, and you have to return him those stocks you borrowed before. So as I mentioned, let's say we short sell here and bought it here. So in this downtrend we got like 50% profit, and in a long, which is the opposite to the short move, you buy it first and then you sell it. So short selling is like doing in the opposite way. First you sell something you don't have, you borrow it from the broker, and then you sell it, and then you have to buy it afterward, which means to cover it. Okay, this is the word for buying buying short. So this is really short example how you can what is the difference between short and long. And another one very thing you need to understand, that first of all, when you short sell, you can lose more than 100%, which means if you buy it, it's in this level 230, and then it's went through, let's say 600. Okay, so it has a move that greater than 100%. So you can lose more than you have in your account. So this is very informative thing you have to take in your risk, that you can lose more than you invested in the start. So it's really understand to make your risk assessment good enough and not to be very exposure to the short or to the long. And if you are, be careful, because your losing can be unlimited. I mean, I saw one guy who had like, he short sold $3 stock, and then it's like had explode with the news to 12 day after, and he lost 400%, and he was all short on this stock. 100% of his account was short on this stock, so he was in debt to his broker for like $100,000 because it went against him. So this is one thing you really need to understand, that in short, your exposure and your losing is unlimited. While in long, while you buy it first and then you sell, the most thing you can do, it's like losing all your premium, all what you put in the money, and then let's say it was 230 and I put like $20,000 and then it went to zero. So I lost only my $20,000. I can't lose more than that. You have to understand it. And in short, you can. But another thing you need to understand that most of the time there is a very famous word or sentence in Wall Street that you're going by stairs and you're going up by stairs and then you're going down by the elevator. So you have to understand that most of the time short and down movements are greater, or the volatility is harder and stronger than the upside. So this only two most informative and very, very important points that you have to understand. At first, I will reiterate it. So first, the exposure and the limit that you can lose on a short sell is unlimited. You can lose more than you buy it, and in long it's not that way. And also, of course, it's the opposite way to first you sell and then you buy, and in long it's you buy and then sell. So this is the first thing. And the second thing that you need to understand, that downtrend is very, very large or very volatile than the uptrend. This is the 2 points that I want you to take care from this video and to understand them, because it's really one of the 2 points that really understand in risk management. And later when you take the courses you will get deeper to that, but this is only to get you understand about it and how you can not be that guy that has 30 grand on his account and then he woke up and he has like minus 120 grand, so he owed the broker because he short and he didn't understand the risk in short. So please subscribe our channel, The Traders. If you like us, you will see more videos of us, and I hope you enjoy. Of course, you can contact us in the mails and everything, and see you in the next video. Bye bye.